Good afternoon and welcome to the first telematics accounting session via satellite. Today, with the telematics program, we're going to be doing activity number 1 in your accounting telematics workbook. So learners, before we get started, the year is a very short year for grade 12 accounting or for grade 12 any subject. So it's very, very important that you set out a study timetable and revise your work every day. Not only accounting, but all the other subjects that you're also doing. You must make sure that you get into an ethic of working all the time so that when it comes to the exams, it's less pressure on you and you know exactly how to work. Okay? So for today, we're only looking at activity number 1 in the accounting telematics workbook. So what activity number 1 is all about, it's divided into 3 sections. You'll find these like what we normally call an icebreaker, where it could either be a true or false question, or it could be a word bank, and then you have to match. Okay? So what you're seeing at the moment is what we have in your workbook. Okay? And at the bottom, that will be in your answer book. Okay? So my presentation will be more or less whatever in the workbook and in the answer book. But there might be a few places where it will differ, and then I will tell you exactly when it's going to differ. Okay? So when we turn to the workbook, you obviously need your question paper with you so that we can do this. Okay? So we're going to activity number 1, and then it should be easy. Okay? So from the word bank, they're giving us 5 definitions, and then we have to match. So this could easily have taken the format of match column A with column B. But now in this case, you have a word bank where it says you have your income statement, you have your balance sheet, you have your director's report, you have your auditor's report, and then you have to identify. Okay? So if you look at 1.1.1, it is which of those items above reflects the operations and the net profit or the loss for a particular financial year. Okay? So as we know from grade 10 already, that normally when we're looking at the net profit or the net loss, that answer should be from your income statement. Okay? So 1.1.1 will then be your income statement. Then if we move on to 1.1.2, it says which of the above again reflects the net worth of a company on a certain date. Okay? So net worth is normally your assets minus all your liabilities. So if I take my assets minus my liabilities, I'm left with owner's equity. But I'll find assets, owner's equity, and liabilities. I'll find all of them in my balance sheet. So that will be the answer for 1.1.2. Okay. In 1.1.3, it says, which of the above reflects the sources of the company's funds? In other words, where did the company get their money from? And how have that money has been applied? So it's like more like a source and an application. The source of the funds and what the money was used for. I think now that item, we've got that to that item now for the first time in grade 12. So that will be the item that's new, or the new financial statement that you'll be getting. That's the third one. You're getting a income statement, a balance sheet, and then you'll be getting a cash flow statement. So the cash flow statement determines the difference between the cash and cash equivalents at the beginning and the cash and cash equivalents at the end of the year. But it tells you also the source of the money and what the money has been used for. Okay. In 1.1.4, they're talking about, it reflects an explanation of the company's activities. So normally the shareholders, who are the owners of the company, they appoint people at the beginning of the year to manage the company on their behalf. Now this appointment is normally being done at the annual general meeting. They decide who are the people that's responsible to manage the company on the shareholders' behalf. And those people then will have to come and report back to the shareholders at the next annual general meeting. Okay? And the people that manage the company normally, they are called directors, and the directors will have to give a report on what the company was busy with in that particular year. It's also the director's responsibility to draw up the financial statements, being the income statement, the balance sheet, and now the cash flow statement. It's not the owners, it's not the shareholders' responsibility, but it's the managers, which in this case will be the director's responsibility to draw up the financial statements. They are responsible for managing, and they will have to manage the company on behalf of the shareholders. Then by 1.1.5, it reflects an opinion on whether the company's financial statements are fairly presented and whether the financial statements are reliable. Okay? So those are normally the people that come and give an opinion on the statements. Okay? Whether it's a qualified, or unqualified, or a disclaimer, that opinion, those are the work of the independent auditor or an auditor's report. The independent meaning that they do not have any ties to the company, they only come and express an opinion. It is not their responsibility to prepare the financial statements. That is the responsibility of the directors. They only have to come and express an opinion. They come and do sample testing, and they want to test if the financial statements are reliable. And then the directors reports to the shareholders, and also the auditors, they also report to the shareholders. Okay? So that should take care of the first part of that activity. Okay, so if you look at the next page, you'll find it says, explain the purpose of an income statement. Okay? So the easiest answer would have been for us just the income statement is there to determine the net profit or the net loss that the company has made for a certain financial period. So if we look at the question, the easiest answer would have just been to show the reader or the user how much profit or loss was generated during the reporting or the financial year. Okay? But the income statement could also be used for some other things. For example, we can draw up income statements from several years, and then we can determine the trend of income and expenses. And that was when we were doing in grade 11, when we were exposed to projected income statements. So we find that the trend is increasing, then we know how to budget. So the income statements for several years can be used for budgeting purposes as well. Okay? Then also another answer that will be accepted was, it shows the totals and subtotals for calculations of a profit or a loss. There's a line item on the face of the income statement that says gross profit. So that will be your sales minus your cost of sales. It gives you a total of the operating income. It gives you a total of the operating expenses. It gives you the operating profit. It shows you different items. Okay? So any of those three answers would have been acceptable if the question was, explain the purpose of an income statement. Mainly used to show the profit or the loss for a financial year. Can also be used for budgeting purpose when it has to be compared for several years. And it can also be give us some subtotals of the items which is on the face of the income statement. Okay, then learners, before we move on to the actual income statement and the calculations that we're going to show you, in your workbook, the very last line in the income statement, there's just a correction that you have to do for me, please. Okay? It was a misprint. It will just be that the net profit after tax should be 198,800 and not what it's shown in the workbook as 998,550. The correct net profit after tax in your workbook, please, 198,800. Okay, so we just bring in that adjustment quickly. Okay, just give you some time to make that change. Okay. Right, so now, learners, now we go to the next part of in your workbook that lays it out where you have to do a calculation. You have to put in the answer. You have to say in which section of the income statement it goes and the item. So my presentation won't look like this. What I'll do, I've cut out each section of the income statement and then I'll give us the answers as we go along. Okay. So my one looks a bit different because my one goes according to adjustment. For example, if adjustment A talks about the company has a markup of 50%, so I'll be concentrating on the item sales. So in your item column on your answer sheet, you will be writing sales. And in your section column in the answer sheet, that will come from the trading section, because normally sales, cost of sales and gross profit, that comes from the trading section. Okay. So what I've done, I have adjustment A. It says that the cost of sales figure, which is given in your income statement, is 4,275,000. The business uses a markup of 50%. Right, so now I have to move from sales to cost of sales. So now I'll have to put the 150 on top and the 100 at the bottom, because I want a bigger answer. Your sales is generally bigger than your cost of sales. Right, so what we have to do now is we have to take that cost of sales figure and we have to divide the cost of sales figure between the items that were sold at a discount and the items that were sold at the normal selling price. Okay, so the adjustment tells me, it says, note that old goods costing 95,000, and that 95,000 is included in the cost of sales, were sold at 10% below the cost price. So for those old stock, that will be my discounted sales. So in that area, I'll be calculating the discounted sales. So in your answer book, you will have these calculations in block by the letter A. You'll have those calculations in that particular block, just the way we have it. Okay? But I'll be showing it. So in your item, you'll be having, it will be sales. It will appear in the trading section, okay, in the calculation. So the 95,000, that is being sold for 10% less than 95,000. So we either calculate what is 10% of 95,000 and minus, or we just take, so it's 95,000 less 10% of 95,000, or just 95,000 times 90%. And that will give me 85,500. So that 85,500 will be the selling price of my discounted sales. So now I still have my normal sales. In other words, that 95,000 now has to be taken out of that cost of sales, because the 95,000 was included in the. Okay, so for my normal sales, the cost of sales will be 95,000 less. So what I've got to do there, I've got to take the 4,275,000 minus the 95,000 and then multiply it with 150 over 100. Okay, that answer gives me 4,180,000. So now I have discounted sales of 85,500 and I have normal sales of 6,270,000. Okay, so those two calculations will go in your block for your calculations. Okay, then the total sales will be 6,270,000, and you're going to add the 85,500, and then we'll get the answer of the sales, which will be 6,355,500. Okay, that will also be your first line of your income statement. So while you're busy with your answer for the first line for adjustment A, you can also complete the first line in your income statement, which you have in your answer book. Okay, which will just be on the following page, which will be on page number 4 in your answer book. So if you turn the page, the first line in your income statement will then just be the sales, and we now just have the sales calculated there as 6,355,500. Then I take my sales, I minus my cost of sales, and I get my gross profit for the year, which is 2,080,500. Okay, so again, the sales minus the cost of sales, those three lines of your income statement, that is what we call normally the trading section. Normally in the past it was your trading account, Sales minus your debtors allowance minus the cost of sales gives you the gross profit. So the first three lines of your income statement is known as the trading section of the income statement. Okay, so remember it was the discounted sales of 85,500 plus the regular sales or the normal sales after you've taken away the cost of the discounted sales. Okay, let's just take a moment so that we can just make sure that we have that. Don't forget, you need to update all the information that you see on your screen. You have to update that in your income statement. The ones below, that will be in your calculation block, and the item was sales. It was in the trading section, and your amount for the sales will be 6,355,500. Okay, I think we've got that one. It's just a bit of thinking. I need to split my cost of sales between normal sales and discounted sales. Okay, so in the next adjustment is talking about a supplier has not paid the commission for February. Okay, so what you see on your screen is your answer of your gross profit, and this is now the next section of the income statement. So the item that we're talking about now is commission income. Okay, so commission income, that will appear in the operating income section of your income statement. And as you can see now, I just left out the first two lines of the income statement now, because now we have the gross profit. Now we're working from there down so that we can calculate the gross operating income, or just normally the gross income. Okay, so what does it say? It says that a supplier has not paid the commission for February, meaning that the company has not received the commission for February. So it means that the company has only received commission. It means that the company has only received the commission for 11 months. Okay, let's just have a look quickly. But the section column for A is the trading section. That will be your trading section. The section that we're busy with now is the operating income section. So that is the section of the balance sheet that we are busy with now, the operating income section. We want to determine the value of the income. So there will be three incomes, and we'll be doing those adjustments. But the first one is commission income. Now, commission income also has a total in the trial balance of 132,000. Then it says that the supplier has not paid the amount or the commission for February, meaning that the supplier has already paid for the first 11 months. So in order for you to get the 1 month that is outstanding, you take the total that you have in your trial balance, right, which is 132,000, and you divide by 11, and that equates to 12,000 rand per month, which means the amount of money that is outstanding that you haven't received, or that the company hasn't received, that item is called accrued income. So that, if it's accrued income, then normally we take the total that we have in the trial balance, and we add the amount that is accrued so that we can get the final answer in your income statement. So the accrued income, the adjustment for the accrued income, or your calculation, will be whatever you see on the screen over there, which is 132 divided by 11, gives you the 12,000. In your amount column will be the amount that must now go to the income statement, which is 132,000 plus your 12,000, and that will give you 144,000. The section that we are in, it's the operating income section, and the item that we're busy with is commission. Okay, so let's just pause so that we can just update that. Then also remember that you and I have to go and update your income statement with that particular figures. As you're doing the calculation in your block, you update the income statement. And that way we'll be populating the income statement as we go along. So you've got to update your income statement after each and every adjustment. As we're going along, you update your income statement. You update your income statement. That's what you've got to do. Okay, so that was adjustment B. Let's just move on to adjustment C. Okay, so what do you have on the screen at the moment? We now already have the answer of the gross profit. We have the answer of the previous adjustments, which was commission. Now we're moving to adjustment C. Okay, so again, we are still in the same section of the income statement, which is the operating income section. Okay, but the item that we are working with this time will be determined in this particular adjustment. It says a debtor that owed 1,600 was previously written off as bad debts. His insolvent estate paid out 40 cents in rand on the 25th of February 2018. That means it's a debtor that was written off previously as bad and now he has come back to pay. Okay, so that item we call bad debts recovered. Okay, so the item that we'll be talking about now will be bad debts recovered. Okay, so in your item column, it will be bad debts recovered. In the section, it's the operating section. Okay, so now how much money are we recovering, or how much of the 1,600 is the company now recovering? Is recovering 40 cents in rand, which means he's recovering 40% of 1,600. So your calculation for the bad debts recovered will be 1,600, the amount that they owed you, times your 40 cents, and that gives you 640. So in your amount column, it will be 640, and 640 will go to your income statement. Okay. Just remember, learners, if there was a total for bad debts recovered in the trial balance, then all you'll do, you'll just have to add the 640 to the existing total. Because there was no total, the 640 was the only bad debts that we're recovering. Okay? And you ignore the other items because the difference was already written off. So all you do, you only record the bad debts recovered. Okay? So now you need to update your income statement with bad debts recovered under the operating income section. Okay, let's just move to the next adjustment. Okay, so what do we see now? We have the gross profit. We're still busy with the operating income section. But this time, we have the answer of the commission income and we have the answer of the bad debts recovered. And the next line that's blank will now be occupied by this particular adjustment. So it says, adjust the provision for bad debts downward, which means the provision for bad debts is decreasing. And the preposition is not to 3,000. It says with or by 3,000, which means the amount must change with 3,000. Now, provision for bad debts is the balance sheet item. We're looking for the nominal account item, and that is the item that will go to your income statement. So the nominal account item that we're talking about now will be provision for bad debts adjustment. So we'll be talking about provision for bad debts adjustment. So that will be in your item column. Okay? There will be no calculation because the adjustment is giving the answer. The adjustment says go and decrease the provision with 3,000. So now let's make the provision 3,000 less. Go and change it, go and adjust the provision. So the provision for bad debts adjustment should be 3,000. Again, we are in the operating income section of the income statement. The item we're talking about is provision for bad debts adjustment. Right? So now we have completed the block. So we can actually total those three amounts and write it in line with the word other operating income. So if we total that, it comes to 147,640. right? Which represents those three figures: the 144,000, the 640, and the 3,000. So those three together gives me the 147,640. Then there's a line, gross operating income. So I take my gross profit and I add my total of the other operating income, and then that will give me my gross operating income. Okay, let's just see if there's any questions while we're pausing on that. Okay. Just make sure, learners, that remember when we're doing accounting, we are always against time. Okay, so sometimes your teacher, it looks like he or she might be going a little bit fast. Okay, it's because that you are always against time and you are always under pressure when you're doing accounting. So what we need to do is we must practice so that we must write faster. I know sometimes it's difficult, it's accounting, but we need to increase our speed when we work. It doesn't have to be untidy, but it can still also be correct. We need the correct answers and we need to think or add just a little bit faster. Okay? But for explanation purposes, we're going to make sure that you understand. Okay? So while we're pausing, there's a few updates that you have to do. You have to update the amounts in the income statement with whatever you see on the screen in front of you now. Okay, and while we're busy with that, let me just see if we can answer a few questions there. Right, the 3,000, I think there's a question on the 3,000. The 3,000 is given in the adjustments by adjustment D. Right, so that will be in your book. So there was no calculation, so it was just take adjustment D as it is, and there it says adjust the provision for bad debts. That's why you'll see I have the adjustment above the table. It says adjust the provision for bad debts downward with 3,000. Okay, then we just have to make sure that you have these exercises in front of you, and then we'll be working through them. Okay, as we come along, the ones that you have questions on, we will be covering that in later sessions. But for today, this is what we are doing. Okay, so let's move on to the next adjustment, which will be adjustment E, F, G, H, I, and J. But they will all form part of the income statement. So we have to make sure that we look at the correct section in your income statement. So at the moment, we buy the operating income. So the next section will be the operating expenses section, right? So there you can see we said adjustment B, C, and D. That will be the operating income. So that will be the operating income section of your income statement. Okay, so what do we have on the screen in front of us now? We have the answer of the gross income, which was on the screen before that, okay, which is the last line. So now it will be the operating expenses section. Okay, so that total that you see on the screen there of 2,228,140 came from the previous screen. Let's just go back quickly. There you can see that's that one, the bottom line. Right, so now we're busy with that because now we're moving on to a different section of the income statement. And on top, it says which adjustments we are covering in this block. Now, we'll be doing adjustment E, which is talking about audit fees, and we have the audit fees total in already. That's the total that's given in the trial balance. And we're talking about adjustment F, which is about the depreciation. So as soon as we've done the audit fees, then the next one that will come, that will be the depreciation. Okay, so what does it say about the audit fees? It says that 75% of the audit fees have been paid, which means we still owe 25% of the annual audit fees. It does not mean that the 73,500 is the 100%. That is the 75%. So we need to calculate the amount that we must still pay and then add that total to that. Okay, let's just see. Okay, so let's just go a little bit slow to make sure everybody is with us. Just remember that the amounts can be written next to the amount with or without brackets, okay? But in your amount column, the brackets normally indicate that you have to subtract. Okay, so next to the wording like audit fees, it's not supposed to have brackets. You can if you want to, but it's not necessary. Okay, so the brackets there, but the brackets in the column, that is where you must watch for that. Okay, so let's just get back to that adjustment quickly. What does it say? It says that the audit fees, so we need to make a calculation for audit fees. It says that the audit fees, 73,500, we want the 25. So it's 25 over 75. And that gives me 24,500. And then you can see that that will be the accrued expense amount. Okay, so when we look at the accrued expense amount, okay, 73,500 times what we want. We want the 25 divided by what we have. We have the 75, and that gives me 24,500. It's accrued, so I have to add. And if I take the 73,500 plus the 24,500, then I get 98,000. Then at the bottom of the calculation, it also shows an alternate calculation. You could have taken the 73,500 times 100 divided by 75, and then you get the answer in the income statement, which is the 98,000. Then you can go and calculate the 24,500 that was accrued. Okay, so in your answer book, we're busy in the operating expenses section. The item we're talking about is audit fees. The calculation is what you have under the calculation. So it's the 73,500 times 25 over 75, or 73,500 times 100 over 75. And then we fill in the answer. Okay. Right, that's to take care of adjustment E. Then adjustment F is just talking about depreciation. It says it was entered as 46,000. It was discovered that it was supposed to have been 57,500. So your item depreciation, no calculation, it's just 46,000, add the 11,500, and then you get your answer of 57. So we understated. In other words, we said it's 46, but it's supposed to have been 57,500. So we have to provide for another 11,500. No calculation on the cost price or the diminishing balance. They don't give any percentages. That will just be your answer as you see it there in front of you. So the item that we're talking about will be depreciation. We're busy in the operating expenses section. Your calculation is 46 plus 11,500, and your final answer is 57,000. Okay. Just remember, you need to update your income statement now with those two figures in your income statement. Okay. Okay, that is what telematics is here for, to assist you so that you can enjoy it, and then eventually you'll be enjoying accounting as we go along. Okay, so whatever you see, that is how we do it here. Right, so let's move on to the next adjustment. Right, so what you see, we did F, so now we're busy with G. So you have the answers of the operating income, you have the answers of the audit fees, which we did earlier, you have the answers of the depreciation, which we did earlier, and now we have to fill in the item, director's fees. So the item is director's fees. We're still busy in the operating expenses section of the income statement. Okay. The adjustment says that the company has 3 directors who earn the same fee. One director was paid 2 months in advance, which means we prepaid. Okay, and normally if we prepaid, we minus the amount that is prepaid. Okay, so now we're taking the information that says 3 directors. So directors' fees is normally a monthly amount that we have to pay them. So it says 3 directors times 12 monthly payments. So 3 times 12 gives you 36. Plus the extra 2 months that we paid in advance or that we prepaid. So it gives me a total of 38 payments. So I'm going to just leave that so that you can just digest that a bit. 3 directors times 12 monthly payments per director gives you 36. Plus the 2 months that we paid in advance for the one, that gives you 38 payments. So that figure of director's fees, 497,800, that represents 38 payments that we made. Okay? So we want to calculate the 2 payments, the amount that we've prepaid, because that shouldn't be there. We must apply the matching principle. So we must minus the 2 months so that we can get that figure. So your calculation is going to start with 497,800 divided by 38, and that will give you 13,100 per month. 13,100 multiplied by 2 gives you 26,200, and that is the amount that we've prepaid. Okay, so if it's prepaid, so that will be in your calculation block. And if it's prepaid, you have to minus. So next to director's fees, we're going to go 497,800 minus 26,200. That will give you a final answer of 471,600. Let's just have a look at that calculations again. It's 3 directors. They got paid their 12 monthly, so that's a total of 36 payment. And 1 director was paid 2 months in advance. So one of them got paid for 14 months. So it's like 24. That's for the 2 plus the 14 gives you the 38. So we divide by 38 to get the monthly. We take the monthly, then we divide it by 2, multiply by 2, and then we get the answer of 26, which is prepaid. Okay. Right, so we've got that. I think then we can move on to the next adjustment, which will be adjustment H. So once again, what you're seeing in front of you is all the previous adjustments, and your income statement should now have been updated with those figures already. Okay, so it's again the operating income that we were busy with on the previous one. Then we did the adjustment for audit fees, we did the adjustment for depreciation, and we did the adjustment for your director's fees. Okay, so your income statement is updated. We're still busy with the operating expenses section, but this time we're busy with the item rent expense, and there's a total of 79,240 in your trial balance. Okay, I think earlier we had a question on the rent expense, so this is where we are, where we have to calculate the rent expense. So the adjustment is saying that a storeroom was rented out from the 1st of June 2017 at 11,200 per month. Then on the 1st of December, the rent increased, meaning that the rent will now be 7.5% more from December onwards. The adjustment says provide for the outstanding rent. The adjustment doesn't tell me how many months is outstanding. Okay? And I didn't rent the place out since the beginning of the year because it says I'm renting it out from the 1st of June. So if I'm going from the 1st of June till the 28th of February, we're only actually renting the place out for 9 months. So my timeline shouldn't be 12 months, my timeline should actually be 9 months. But before I go anywhere or do anything, I can just look at the information and see that my rent is 11,200 before the increase. So I can determine what's the rent from the 1st of December onwards. So from the 1st of December onwards, it will be 11,200 plus 7.5%, which gives me 12,040. So I've got rent from the 1st of June for 11,200 and then rent from the 1st of December for 12,040. So I can actually calculate the amount of rent I'm supposed to receive for the whole year. Even though it's not a whole year, I can calculate the amount of rent I'm supposed to receive for this financial year, but it's not 12 months. I'm only renting the place out since the 1st of June. So if I'm going from the 1st of June until the 30th of November, that is the day before the increase, I'm counting 6 months, 6 months. Therefore, it's June, July, August, September, October, November. I do not count December because in December, my rent will become 12,040. So for the first 6 months that I'm renting the place out, I'll be earning 67,200. Then from December onwards till February, which gives me 3 months, my rent will be 12,040. Can you see that the 6 and the 3 gives me the 9 months which I've been renting the place out, but I haven't received all of that money. Right, so the amount that I need in my income statement, in the column or in the answer, is going to be the sum of 67,200 plus 36,120. It's going to give you 103,320. Okay, so I have the answer. Those 2 months together will give me that particular answer. If we wanted to now we can go and calculate how much rent was accrued, because 79,000 plus what the accrued expense gives me the 103.32. Okay, so the adjustment was rent expense this time. If the adjustment appears under the income section, then it will be rent income. So whatever we applying to the rent expense can also be applied to the rent income. But in this example, it will be rent expense. That's why the rent expense will fall under the operating expenses section of the income statement. Okay, let's just have a look at that and make sure that you update your income statement. Okay, so now we've got rent expense. I think we've covered all the adjustments for the operating expenses section. So learners, while you're busy with updating your income statement, you must now make sure that you write in all the other expenses that didn't have adjustments. For example, you need to write in bad debts because bad debts didn't have an adjustment. You need to write in salaries and wages, which was 950,000. You need to write in bank charges, which was 9,200. Now, as you can see on the screen, I don't have all those extra lines on that presentation. So just for presentation purposes, and I stress again, just for presentation purposes, all I did now, I called them other expenses. The 950,000 is going to be your line for salaries and wages. The 9,200 is going to be your line for bank charges. And the 14,520 is going to be your line for bad debts. So just for presentation purposes, I just grouped them together under other expenses, and I got a total. But you will have the individual items in your income statement. You will have those three lines written separately. Okay, so don't worry where the 973,720 is coming from. You will be writing those three figures individually. And as you can see now that you have populated the operating expenses section of the income statement. So now we can get the total of the operating expenses, which is 1,704,140. That means you can calculate the total of the operating profit section. Okay, let's just pause a bit so that you can just make sure that you have all those figures. Right, learners? Okay, so let's move on. So what you're seeing on your screen now is the bottom part of your income statement. There normally where you find your interest income, your interest expense, and your income tax. And just remember now, you have a figure of 524,000. And right at the beginning, I said that the corrected net profit after tax should be 198,800. Okay? So now we have to populate those sections. So now we're busy with the interest income section, we're busy with the expenses, and we're busy with the income tax amounts. So we're busy with adjustment I and adjustment J. Okay, so I've got I on the board there. It says the fixed monthly repayments, including interest, is 31,600. Capitalized interest, that is the interest that we need. So that figure we will take to the interest income. To the interest expense. Then the other part, interest for the next financial year. That part and part of the loan that will be repaid, that has got to do with the short-term loan. That is not for income statement purposes. We only need the 242,500 as the interest expense figure. Okay, so this section should go much quicker than the previous sections. Okay, and there's no adjustment for interest income, so now we can write those figures in just like that. Right. Then we just have to add. So we can write that figure in just like that. And they're giving us the interest expense. So we can write the interest expense figure in just like that. Okay, because it's 526,500 minus the interest expense, which will give you the net profit of 284,000. Then adjustment I or J kicks in. It says income tax is calculated at 30% of the net profit before tax. So I have my net profit before tax of 284,000. I multiply that by 30%. And then we have the figure of the income tax, which is 85,200. And those figures must be shown in brackets to indicate that you are going to minus or deduct them to get the answer. Okay. Then what I have there is alternate calculations. Because they gave us the 198,000, I could have calculated the 284,000 by doing that. 198,000 times 100 divided by 70. So why is it 70? Because they tell me that the income tax amount is 30. So if I take the 100 minus the 30, I will get the 70. So it's just a matter of what we want. We want to calculate the before tax, so that will be 100, and we have the after tax, which is the 70. So it's 100 over 70 times 198,800. And then that will be. Then we could have also calculated the income tax in the same way, 30 over 70 times times the 198,800, and that was going to give me 85,200. Okay, let's just update your income statement. Just make sure that you follow with the calculations. If there's no calculations, then you just have to write the answer in. We're busy with the interest on loan section, so it's either interest expense, interest income. We're busy with the income tax section. It's going to go to SARS. So that's the section that we're busy with. Just remember that we never show ordinary share dividends in the income statement. That will be the item that has to go to the retained income note. Okay. You just make sure you update it, learners. Okay. Okay, let's just see. I think there's no questions. Okay, I hope I answered some of the questions. I think there was a question on rent. We dealt with that particular question. Just remember, learners, that we're always writing against time. When we're busy with accounting, you always need to be prepared. You cannot come to your classroom and then you want to sharpen your pencil. You need to come prepared. Your calculator and your stationery must be by hand all the time. Okay, when we're doing accounting, we are writing against time. You must make sure that you pressurize yourself to answer those particular questions. Okay. Then, learners, if there's nothing else, I don't see any questions. And then I hope you enjoyed the lesson today. I hope this is helpful. I hope what we're trying to do with the telematics is to assist you to become better accounting learners. But what's important, you have to follow in class, you have to listen attentively, and you have to practice those extra exercises. It will come into good stead when you're doing your exams. You need to write against time. Then all I've got to do, I've got to thank you very much for tuning in, for watching and taking part. I hope it helped. I hope to see you next week, where we can hopefully take it a little bit slower and explain the balance sheet. From me, thank you very much. Goodbye.